Hi everyone, welcome back. This is the next episode of Real Sense Retirement. I'm your host, Isaiah Real. In today's episode, I'm sharing with you a June market update. So let's start here. Imagine at the tip of an iceberg. That's what you see when you're in the water. You see that tip, and it may look huge. But when you dive underneath the water, what do you see? Well, that tip of the iceberg is just the smallest part of that thing. That thing is ginormous underneath. That's how this economy is right now. Don't let the news fool you. I know there's a lot of headlines out there with all kinds of stuff, good and bad. But what you have to do, and again, I'm going to repeat myself here, is you have to look at the data. The economy is getting stronger. We're growing. Stock markets, just today as I post this, S&P 500 hit a brand new all-time high. People are starting to go back to work in person. There's a lot of positive things happening. But we cannot compare this to previous experiences in the economy. This is a brand new experience. We've never purposely shut down the economy before. We've never purposely re-turned on the economy before. This is all brand new territory for us. So with that being said, what do we have to do? We have to not look at the tip of the iceberg and what the headlines are telling us. We have to look at what's underneath. And what's underneath is the data. And what the data is telling us, and according to First Trust Portfolios, jobless claims, they're still up, but they're lowering. Month over month, week over week, they're decreasing. People are getting jobs. That's good. We need that for the economy. Staffing, retail sales. You want to know a funny fact? Retail sales are higher now than what they were in 2019. People are shopping. People are spending. They're using their credit cards. They're going out. That's fantastic. People feel confident that they can use their dollars because they know they're going to have more coming in and spend it on whatever they want, goods and services. Steel production's going up, rail traffic is going up, people are shipping out materials again, lumber, steel, all that kind of stuff. Airplanes, checkpoints, airplane data is coming back up, commercial flights, those are increasing. So there's a lot to look forward to. When you look at that data, things are increasing. When you look at stocks and in sectors, well, based off of all this information, what kind of sectors should we be paying attention to? Well, right now I say there's three. The first sector to be paying attention to is financials. It's the big banks. Like I just mentioned, people are spending, they're going shopping, they're putting their credit card down. People are getting refinances, they're buying new homes for mortgages. The big banks take care of all of that, and they're doing fantastic. In fact, they're one of the top producing sectors for 2021 so far. And so for us at Lugano Wealth Advisors, in our opinion, that's one sector that we're paying close attention to is financials. Number two is consumer discretionary. What that is think of shopping, online shopping, restaurants, car sales, home building, things that do really well in the beginning of a market upturn. That also includes materials and transportation. So again, making the materials that people are going to be using to build the homes, build factories, materials that factories need, everything in between. Transportation of those materials, trains, automobiles, boats, you name it. Everything that we need when the market's growing, that's what's doing well right now. And then the third sector is technology. It's continued to do well. It got beaten up here a little bit in the last, I would say, 2 months or so, but it's starting to pick back up again. It's getting stronger. And of course, we saw it during the pandemic and we're seeing it now. Technology's only getting stronger. We're only using it more. There's a need for it, and we definitely want to focus on that when it comes to investments. And lastly, I'll leave you with this, inflation. I've had a lot of questions about inflation. Let's talk about that for 30 seconds. We're seeing rising inflation right now in this moment because we turned off the economy last year. companies, manufacturers, that are recouping what they didn't make or produce last year. So they're taking care of contracts from last year, taking care of contracts from this year. The people who build these materials, they don't have enough because they shut down last year. So because of all of that, because the need of the demand for the product, the need to make the product, that's rising inflation right now. We'll see if it's going to be temporary or long-term. My initial thoughts is the steep increase that we've been seeing, that may be temporary, but I do think inflation is here to stay, especially because our government has been printing money. And of course, we need that money right now, but because they've been printing so much, it's going to cause inflation. Again, that's just my own opinion. If you have any questions, if you have any thoughts, please feel free to reach out. I look forward to talking to you soon. Thank you so much. Have a great day and take care. Bye-bye.